Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we will be talking about the key market events that are driving prices today. We'll be looking at the economic calendar, trying to understand the key drivers for the markets this week. And once we are through with that, then we also do technical analysis, try to understand the key and important price levels as well as market structures. And these will hopefully help us identify potential market opportunities. At the same time, as we all know, these sessions are not investment advice. They are not a recommendation to trade. So you should always do your own analysis and due diligence before making any trading or investment decision. So let's get things started. And hello, Owen. Thank you for joining the session. I appreciate your feedback. Let's get things going. So I'll be starting by first focusing on the economic calendar. We don't have much happening today, but then there's a lot to look forward to for the day. So yesterday was quite a silent day. We didn't have much, but then the home sales data came in weaker than expected. And then we started Tuesday with quite a number of negative news. Beginning with the shop price index in the UK, which came in at 4.3%, a slowdown from 5.2%. Then retail sales coming in weaker than expected from Australia at negative 0.2% from a previous gain of 0.9% in the month of October. So September's data is the one that was 0.9. October, we saw negative 0.2%. And of course, once we enter December, we'll also be getting November's data. So this was later followed by a speech from RBA Governor Bullock. It didn't have much impact on the markets. Then we had the core inflation data coming in from Japan, and this stood at 3.0%. And now it's been over a year where we are seeing consecutive inflation data coming higher than the Bank of Japan target of 2.0%. So with this in mind, we expect that at some point next year, the Bank of Japan will completely eliminate its yield curve program, the one that it has been adjusting this year. So at the beginning of the year, the yield curve limit was 0.25%. They doubled that to 0.5 and then doubled it again to 1%. And then in the last meeting, they decided to make it flexible, meaning that the yield on the 10-year Japanese government bonds can be allowed to move above 1%. And this removal of the yield curve control is in preparation for financial or monetary tightening. So we're expecting that the Bank of Japan will be doing some form of tightening next year. And as a result of that, we can see increased bets on the strength of the Japanese yen. So besides this, there's also the weakness of the dollar. So this has also been driving USD JPY further downwards. So after peaking at around 150, we are seeing the Japanese yen start to take shape and recover some ground against other currencies, including the US dollar. So for the rest of the day, we don't have any major news. Of course, we will be looking at important data, such as a speech from German Buba President Nagel, and this just started. Then later on, we'll be having the CB leading index data for China. Then the Case-Shiller Composite 20 Housing Price Index for the US at 5 p.m. before we look at the Conference Board Consumer Confidence Survey, and this will be happening at 6 p.m. So there will be a sequence of speeches from several Fed members. You can see a speech from Goldsby, Waller, as well as Bauman, then a speech from ECB President Lagarde. This one will be pre-recorded. Then MPC member Haskell from the UK will also be speaking, followed by two more speeches from FOMC member Barr at 9:05 and 11:30 p.m. So those are the key expectations for the day. We don't have like major market moving news. Then later on, we'll be having CPI data. This is at 3:30 a.m. tomorrow, before we look at the interest rate decision by the Reserve Bank of New Zealand at 4 a.m. And this will be right before the next market snapshot episode happens. So in the morning, we'll be looking at the German preliminary CPI as well as the Spanish flash CPI, which is a measure of inflation for two top European economies. and this will be a leading indicator on the inflation trends within the Eurozone. So later on, we will be looking at the preliminary GDP for the US, and this will be at 4:30 p.m. And of course, a speech from Governor Bailey from the Bank of England at 6:05 p.m. So we also be getting crude oil inventories. This is very important because it tends to shed light on the trends in crude oil production. And this will tell us whether the US is building even more inventory or whether this is reducing. Remember, it's a weekly data point. Then getting to Thursday, we'll be looking at the manufacturing and non-manufacturing PMI for China. Then the OPEC meeting will be happening all day on Thursday. So the OPEC meeting has been quite a market mover because there's a lot of speculation that the OPEC plus countries are voting to instead continue tightening production, especially for the African participants. And as a result of this, we could be seeing oil prices start to recover. So there will be another speech by ECB President Lagarde, GDP data from Canada, and of course, the most important data point for the week will be the core PCE price index, which is the Fed's favorite measure of inflation. And if it comes weaker than expected, then we will be seeing increased bets that the Fed may cut interest rates early next year. And that might contribute further to the weakness of the dollar index. So towards the end of the week, we'll be getting jobs data coming in from Canada and end the week in style with a speech from Fed Chair Jerome Powell. So besides this, there's quite a number of other highlights we might be looking at in the markets today. So one is an update on crude oil. So WTI, or West Texas Intermediate, which is short for crude US oil, rose above $75 per barrel on Tuesday, snapping a 4-day decline as investors geared up for the OPEC Plus meeting later this week. This is on Thursday. So when Saudi Arabia and Russia are widely expected to extend voluntary supply cuts until at least Q1 2024. So traders are also speculating that the group could deepen production cuts further to support the market. So last week, oil prices came under pressure after the OPEC Plus ministerial meeting, initially scheduled for November 26, was postponed to November 30 due to a dispute over output quotas for African producers. So signs of robust supplies, particularly from the from the non-OPEC countries, have also been weighing in on crude prices, with the US crude oil inventories continuing to increase more than anticipated. So the countries that are not part of the OPEC bloc have been expanding their production of oil, and these have the impact of dropping prices. So meanwhile, the International Energy Agency said it still expects a slight surplus in global oil markets next year, despite the potential extension of OPEC Plus supply cuts well into 2024. So another key major market moving news is to understand the weakness of the dollar. So the dollar index held around 103.1 on Tuesday, hovering at its lowest levels in 3 months as a weak US economic data reinforced bets that the Federal Reserve is done raising interest rates and could start cutting rates next year. So markets see a 25% chance that the central bank could begin cutting rates as early as March 2024, and a 45% chance by May. So data released on Monday showed that the US new home sales fell 5.6% on a seasonally adjusted basis to 679,000 units in October, falling short of the 723,000 units expected by analysts. So investors now look ahead to PCE prices, the Fed preferred inflation gauge, as well as personal income and personal spending data, and of course the ISM manufacturing PMI for further guidance. Moreover, several Fed officials are scheduled to deliver remarks at various events this week. The dollar weakened across the board, with the most pronounced selling activity versus the yen and antipodian currencies. So then, with that in mind, now looking at the technical side of trading, first things first, we look at the dollar index, and clearly you can see it has been quite weak. So for the last 3 days, we have been seeing this sell-off happening in the dollar index after these 2 days of upwards trajectory. So from the 4-hour chart, this is how it looks like. So last week we started with a drop, a big gain, and then eventually towards the end of the week, the dollar index continued weakening, and this week looks also more bearish for the dollar index. So with the weak dollar index, we are seeing these currencies moving higher. So we speculated the pound USD would continue moving higher and eventually get to a target of 1.26360. So eventually got there yesterday, and then early this morning they tested the area, and it's seemingly looking like a strong resistance level. But then judging from what you're seeing with the dollar index, there's a good likelihood that the pound could eventually break above this area here, and we could be seeing some further upside for the day. And this is similar with the Euro USD, which is also retesting a major resistance level. So the key price level remains this resistance at 1.096344 for Euro USD, and for pound USD 1.26360. And now that's basically on whether the market will manage to break that level or not. So as for USD JPY, we are seeing this deceleration in price after finding resistance around this area. So I remember mentioning 149.741 as the major resistance, and the support being at 148.951, where the market managed to break, retest the area and continue pushing down. But then this morning we are seeing this reversal happening, which means that there's this likelihood that the market will be retesting this area here before making the next major move. So I'll be observing 148.951 as a new potential target. And potentially, if there is evidence of bearish entry, then the original target remains of 147.236 as the dollar remains weak in the markets. So USD CAD managed to find a very strong resistance on a previous low. So after finding this resistance, you can see the pullback and the continuation for the downwards. So our target yesterday was 1.35950. It has already been hit, and now we are looking at the potential of the market breaking down lower. And now the new target will basically be the previous low. So it's not very far off. So it's a very short distance, but then it's quite meaningful. So we could be seeing this pair breaking this area here and getting to 1.35681. So as for gold, the upside momentum continues. So after breaking outside this triangle, we saw the market accelerating higher, and this was on Friday. Then on Monday, which was yesterday, the market continued pushing higher, getting to a target of 2018, then pulling back downwards and trading sideways. And now it seems like gold doesn't have a proper market structure to identify a continuation. So in this case, the high that we saw early this morning, and this is the same high that we saw yesterday, makes the 2018 price level a very important price level to monitor, because the market could either break or retest this area here. So I'm more interested in the price action around 2018. So break above means we move higher, but then if there's another retest and the market is unable to break, then we trade back downwards. However, overall from the daily chart, this is how the chart is looking. So a market that made a very strong leg, a pullback, and then a movement further back upwards. But then notice that the previous high has already been broken, which basically prepares us for some further upside. So in this case, I expect to see some further upside momentum, especially after the formation of this pattern. So for those who are new, you can see this U-shaped pattern, which almost looks like a camp, and then the handle here, which is a continuation pattern, which basically implies that there's more room for upside for gold prices. So for Audi USD, we had this channel happening here. Market managed to break on Friday. Yesterday, a continuation, and today, a continuation of the same is expected. Even though the price action from the forward chart is indicating a rejection of higher prices, this candlestick is not very promising for bulls. But then from the daily chart, this is how it looks like. So after trading in all this period, I think it's within a period of 3.5 months, the market managed to break towards the upper side, and the close is expected to continue higher. So even though there seems to be some form of resistance, the room for upside is still significantly high, and the market has not yet broken the lower trend line on the 1-hour chart. So if you are using this, then you should know that there's a good likelihood that this area will be holding. So monitoring this area here, especially around 0.66, we might identify a nice support. And once we see evidence of bullish entry, then perhaps we'll be able to squeeze in some further bullish positions. So US equities are currently struggling with a major resistance level. For the Nasdaq, it's 16,057. So 16,057 has been retested 3 times, and every time the market has been unable to break. So following the last 3 days, we saw what happened with first the Thanksgiving holiday when the market was closed. Then the Black Friday. This was the Friday right after that. Thanksgiving, the market was opened halfway and we didn't have much of a volatility. And then yesterday was a Cyber Monday. This is when you expect the most discounts from e-commerce platforms. And clearly, you can see that the Nasdaq was pretty strong before erasing some gains towards the evening. And then today, there is this consistent pressure to attempt to go further back downwards. But then, for any technical price action trader, you know that this is where our support lies. So we monitor this support area that has been holding here. And of course, the resistance at 16,057. And then a potential break will basically present a good trading opportunity. So the US30 is not so different. It attempted to break towards the upper side yesterday and failed and has yet remained within the same levels. So in this case, if you go to a smaller time frame, such as the 15 minutes chart, you will notice the way our support line has been holding along this area here with the horizontal resistance at 35,393. And now it's a job of monitoring whether the market will break this area or this area to give us a direction. So I'm more inclined to a continuation of this bull market because there's more companies touching their 12-month high, and this could fuel some further upside momentum for US equities. So it's the same thing for the S&P 500. So if you zoom out, go to a 15-minute chart, then identify the most recent lows, and then you track them this way. Seems like the S&P 500 is the one that is closest to forming a breakout. It hasn't broken out yet, but then this momentum seems pretty strong. So we could be seeing the US equity indices take a step backwards today, but then it's something to monitor as the day goes forward. So in this case, I'll be monitoring this area as the resistance. In this case, I try and adjust the most appropriate one. So it's 4,561 as the resistance. Of course, the support is just right here. The price action here is very important to me because a break below this would mean some further downside momentum. And of course, we could also be seeing the market getting some support here. So Brent oil prices managed to make a good rally yesterday in the evening, but then it was not enough. So now we are focusing on today, trying to understand whether this bullish momentum will continue. So let me remove my accumulated bias, zoom out, and now try to understand this price action here. So clearly, we can all see that this is a triangular formation where the market found resistance along that trend line. And then for support, we can say it's somewhere along this line. So there's been these huge swings that are getting smaller and smaller each time. And now it's more reasonable to say that the market is bouncing off the lower trend line and now moving towards the upper trend line, as long as it remains within this pattern. And the pattern can basically tell us that the overall direction for Brent oil prices is sideways. So in this case, for today, I expect to see some further upside momentum. So potentially the price moving higher and getting to the last high that we saw on Friday. And this is a price level of around $82 per barrel. So in this case, as we look ahead to the Thursday's OPEC Plus meeting, then there's this expectation that the market could break yesterday's high and eventually get to $82 per barrel. So for the French 40 index, I think this is the most promising one. So I've been monitoring this area here, and if you count the number of days, this is a 10-day pattern formation where the market was trading in this rising wedge. So it was unable to form higher highs, and eventually it made a breakout towards midnight last night. So since forming this breakout, you can see how we are entering the London session with an acceleration downwards. So in this case, it makes more sense to expect the price to drop the base of the pattern And this would be a nice drop to 7,164.98. So USD CNH is basically forming some form of flag. So after the big sell-off in the dollar against the Chinese yuan, what we are seeing here is the market trading within this flag. And of course, monitoring the breakout would present a nice trading opportunity depending on the direction of the break. So this is an area that we monitor going forward, trying to understand where the market might be headed next after this. So for the Euro 50 cash index, yesterday I was monitoring this area here as a potential entry point for a short selling position with a stop loss just above the previous high. Notice that the market was unable to break here on the Euro 50 cash index. And then from there, remember, whenever there is such a breakout, the target is the base of the pattern. So 4,286, it seems like a really nice target for Euro 50 short selling. So Bitcoin has also remained within a similar pattern, but it has not broken yet. So this is what we are looking at. So a potential break could be getting set up. So we just be patient and then observe the price action. So it seems like this is our resistance here, and our support is all the way down here. So we just keep monitoring and identify when the break potentially happens. So for New Zealand USD, we are seeing a reversal here. It's more or less like the dollar is taking some form of strength as we enter into the London session. So this trend is being felt across board. So when you look at the New Zealand USD pair, despite having this strong bullish momentum and getting to our target here, we are seeing this reversal happening strongly across board. Then it could be potentially a retest of this area here around 0.60469. So we also have USD CHF right here. We are seeing the dollar attempting to bounce again. So after breaking outside this range, we are basically seeing the market going back to retest the area. So of course, the area of retest is 0.88211, but then there's also a large pattern play. So rather than the sideways momentum, this also becomes a theme in this asset. So we just monitor that resistance and of course, the support levels along these lines. So there seems to be some form of very nice support around this area here. The resistance here, and then a break is coming. So once the breakout happens, then it would present us with some nice trading opportunities. So pound yen is attempting to mount a comeback after the big sell-off happening yesterday and early this morning. So we have a pretty strong pound. So perhaps even a retest could be in the books. The market gets back up and retest the 188.222 high, which was the previous high here. So now with this reversal and the pound erasing the losses from the yen earlier in the day, we could be seeing some further upside in the market retesting this area. So that's it for the day. Hoping that you guys have learned something today. Hello, Owen. Hello, Jeremiah. Luca, Joseph, J Squad, Takeout. Peter Samuel, Martinez, and Vinod. Would you repeat the analysis of Euro USD? As I always say, these sessions are live and you can access the recording immediately. So I don't like or necessarily prefer repeating an analysis, especially considering that the session is just live recorded and you can access it anytime, especially immediately after the session. So I'll do it. I'll find the Euro USD, try and understand it. So here's our Euro USD. It seems like this was a very strong resistance and it's the same resistance here. So 1.09634 can be termed as the resistance and potentially the most significant price level for trading Euro USD today. So knowing this, then it means that there's a good likelihood that the market could retest that area here, and that could be the point that helps us make a decision about trading Euro USD for the rest of the day. So the idea is from this point onwards, we can either get a break and the market continues moving higher, or then it could serve as a very strong resistance and the market could move back downwards. So in this case, a retest of this area will be very important, and observing the price action, the size and shape of candlesticks around this area will determine what direction the market goes. So on the lower side, if you take these most recent lows, then you notice that it's more of an ascending triangle, where the market bounced from here, went up and then down and then all the way up, and could be potentially headed back down here. However, before that happens, the area of interest is along this area here. So depending on what we see here, then this will guide us on whether the market moves higher or moves further back downwards. So it's all about monitoring the price as it gets to this area to see whether there's a break higher or a retest of this lower trend line. So I'll be patient, wait for the market to get here, and then see how what kind of candlesticks we get, the size and shape of those candlesticks. So with the dollar index being pretty weak, even though we have had 5 consecutive hours of the dollar index gaining, there's a good likelihood that we could be seeing the dollar index taking a step back. Main reason I'm saying this is because we are already seeing the dollar index looking at a 4-day resistance, and it's already beginning to change direction here. So with a weakening dollar index, then a potential rally in Euro USD would get us back to this area here, 1.09634, and this could be the basis of identifying a potential opportunity based on whether the market breaks or reverses from that point. I hope that answers your question. Hi Rufas, how will the new levies taxes on online forex brokers affect trading? This is a really good question. I saw this article on Business Daily early this morning. It was quite surprising to me that the levies zimetufikia, or they have reached the forex brokers. So I don't know how it will affect the products. So I honestly don't have an opinion on how the company will react. And if I get any information about this, I'll be happy to share on perhaps a future episode. So thank you, Vinod. Thank you, everyone. And I hope to see you guys on the next session. Remember, today is Tuesday, super Tuesday. So on Tuesdays, we normally get an extra session where we focus on the New York Open at 4 p.m. So make sure to subscribe to the channel, set notifications on. So whenever there's a live session, then you will be notified and you will not miss a thing. So please remember to get back here at exactly 4 p.m. and we'll try and understand the key developments and some of these key setups and see which ones carry the most weight. As per today, I think the most interesting movement is the Euro 50 and the French 40 index, which seems to have broken outside these patterns quite successfully. And I expect this momentum to continue for both European equity indices. So as for the UK 100, it's also showing some very nice break here. So after finding this support for 5 consecutive days, we have finally broken below that, and there's still more room for downside. So perhaps towards the previous low around this area of 7,403. So thank you very much, guys, and I hope to see you on the next one.